All right, we are live. Welcome everybody to Learn It Live. I'm super excited today to bring to you the best practices for nonprofit leaders in today's political economy, presented by Michael Klein with MPK Advisors and CPAs. I'd like to read a little bit about Michael. That way you can kind of get an idea of the amazingness that he brings to this presentation. So Michael graduated from the University of California at Berkeley with a double major in economics and political science. And while at school, he was able to study and work in Washington, D.C. and in Africa, where he learned a great deal about business and government. With over 12 years of subsequent experience in financial services, ranging from experience as a financial advisor, a tax advisor, auditor, and consultant, Michael's been able to gain knowledge in a plethora of roles across many industries. He enjoys working with nonprofit organizations and specializes in this industry by offering a range of financial management services, from basic accounting and reporting to CFO level outsourced services. He also has experience in tax preparation and compliance services for nonprofits, and helps to ensure that they meet ongoing compliance requirements while strategizing for program growth. That's kind of why we're all watching, right? So Michael shares the consistent theme of mission, purpose, and knowledge, and sets himself apart as a CPA because he seeks to understand the vision and mission first, which help drive the financial conversations. Michael also sits on our board of directors as our treasurer, and we are just so lucky to have him here. So Michael, go ahead and take it away.
Well, thank you, Heather, and I'm definitely lucky to be part of the Chamber family, so the feeling's definitely mutual. As Heather mentioned, I have dedicated my career and just my passion has always been to serve the not-for-profit industry. Started volunteering early on in my life with many nonprofits, and I've served on quite a few boards, and then entered into the accounting profession and found that, it's just an extension of my passion to serve with the nonprofits. So I decided to specialize in that niche industry, and I've really met some amazing people doing some amazing work in that field. And so today I want to share with you guys some of the best practices that I've come about and come across just from my not only my my volunteer work and work in the career industry, but also sitting on many boards and just interviewing many nonprofits of all different scopes. So the large, the small, mid-size, different industries, doing different things, ranging from foster to public and social assistance to youth organizations and many others. So today what I hope to do is just to give you really an overview of 6 or 7 key areas I think are really critical. I know many people have been bombarded with so much as far as coronavirus and COVID-19 updates. So I tried to connect them here, but I wanted to also communicate some of the fundamentals that carry across time, and some of the fundamentals that are important in so many different industries in the not-for-profit space, regardless of the situation, but then connecting those key points and foundational points to the current times and how you might apply those and what are the implications for those concepts. So the roadmap for today, you can see there, I bolded some of the areas, the key terms that we'll be looking into, key topics, starting with good governance and how that flows into the strategic planning process for organizations, and related to that is conducting risk assessment. And so I'll go into what that means. Rethinking the budget process. Now, this is probably more focused on our current time because we're having to pivot pretty rapidly as organizations, looking at adapting, being quick on our feet. So looking at rethinking the budgeting process completely. So it might be a little bit of a discomfort or out of the comfort zone to do that, but we'll go through that. Evaluation of progress in aligning activities with mission, dashboards, which is related to the budgeting process and development of financial and non-financial key indicators. And then lastly, you might say, well, this guy's an accountant, but you know what I've found out in working with organizations is good leadership strategies are so important to navigating, especially through times of rapid change. So I wanted to just highlight a few things I've learned, what good strong organizations are doing as far as leadership goes. So the first area, good governance. So we'll go into a few of the legal responsibilities at a high level of the governing body. And typically when we see governing body or say that term, it typically means the board of directors. Now, some people also call it the board of trustees, but for the most part, it's the board of directors that is charged with governance. And so what does that mean? Well, I list 3 terms down there that really explain what the board is charged with. And so another term that's used is fiduciary role and capacity. So that's what the board is held to as a standard. So the duty of care, which is the prudent person standard. So that's really charges the board with making wise, prudent decisions given the facts and the circumstances they have. So what they have before them, making the best use of the resources and not doing anything that's negligent or grossly negligent and being just dismissive of the circumstances. Duty of loyalty. So as a board member, you're coming on and you're really negating your self-interest to the best extent possible. So what the IRS and generally the public doesn't want to see is someone coming on the board to serve themselves, right? You don't want to see somebody serving on a board that's getting a bunch of vendor contracts and really taking advantage of it. Or maybe, they're sitting on another board or have a tie-in with another organization that's really self-serving through that role to serve the other purpose. So they want to see that you're dedicated and loyal to that particular nonprofit. Duty of obedience, the last one there. So adherence to mission. So this is going to be something I'm going to talk about a little bit later as well, but IRS standards, and then also really the core of the nonprofit organization is the standard to adhere to the mission. One, because the IRS wants to see that you're aligned with your tax exemption. So when there's significant change in programs or veering off course, you run the risk of going out of compliance with your tax exemption in the first place. But also your donors, grantors, and stakeholders may wonder, well, what business are they in? I thought I was giving to a particular cause, and now, this organization is doing something different. So the board ensures that the organization stays on track. So you'll see off to the right there, the internal controls. I'll go into this a little bit in the next few slides, but some of this may be new for you. But it's really very important that you understand the role of the board to develop and also monitor, track, design, and implement internal controls. And what does that mean? So that means all those policies and different codes of ethics, conflict of interest, and the environment and the tone that's set so that the organization stays in alignment with meeting its objectives. And so that if that gets off course and these internal controls are not in place, you could run the risk of not detecting some errors or even fraud that happens, and that's what you definitely want to avoid. So we'll go into the next slide. We'll go into a little bit more about good governance principles. So years ago, I think it was back in 2007, there were a band of nonprofits and stakeholders in the nonprofit industry that got together and wanted to come up with solid principles that all nonprofits could abide by, and then disseminate that information to the industry as a whole. And so they came up with 4 key areas. And this is something good to know for nonprofit leaders is, okay, what are the standards and what are some best practices in governance? And so this panel on the nonprofit sector created 33 principles in 4 key areas. And I list them there. I won't go into the details of all of them, and you can find out more information about this by searching the panel on the nonprofit sector and these 33 principles if you're interested. And they provide more detail. But basically, they boil it down to 4 major key areas that you want to address in your policies and governance practices. The first is legal compliance and public disclosure. So this also ties into the Form 990, which is required that nonprofits file annually. And that 990 comes in a few different forms depending on your total assets or revenues. But generally, if you're filing a full 990, which means you reach certain revenue thresholds or asset thresholds, you'll need to disclose a lot more because the IRS wants to know. And more than that, the public wants to know, do you have good governance principles? And so you'll have to answer these questions through a checklist and governance practices that show up on that 990, which is a public document. So you want to make sure that a lot of these areas, you have some sort of policy or some way to address these because it'll come out on the 990, and especially, you know, if donors or grantors are asking about these things when you're applying for grants. So legal and compliance and disclosure, you can see there, ethics, conflict of interest, whistleblower policies, document retention. So again, I won't go into the details on these, but you can look this up. Just make sure you have these in place. Effective governance. So this goes into the composition of the board and how they select the CEO and evaluate the CEO, and how the board really develops itself and governs itself through board development and other self-review policies. And then you can see their board compensation also. So you want to have, the organization should have a means for the board to self-perpetuate in a sense, but also hold itself accountable, and also the CEO, which is the major role of the board, is to hold the CEO accountable and review the CEO, but also support the CEO in the advancement of the mission. Strong financial oversight. So you can see there, of course, this would come into play as a sound principle. You couldn't neglect financial implications. So records and documents, so financial reporting, budgets and performance management. Although with nonprofits, budgets aren't typically legally required, it is heavily recommended and a best practice, which we'll go into later, an allocation of resources. And then lastly, responsible fundraising. So the last thing you want is to have a fundraiser, raise money, and then go spend the money on something that completely doesn't relate to your advertising and marketing campaign. So IRS would frown on that, and also the State Attorney General of California would frown on that. And so they're looking to see that you have an aligned all your advertising marketing materials for your fundraising align with your intent to spend the funds, and that you're not, you know, doing something duplicitous and going around it and spending funds that aren't consistent with what you had communicated to your donors. So we'll go to the next slide. So boiling this down, what are some of the key functions of the board? So I tried to summarize just some takeaways here for the role of the board, because there may be board members on this call, or, you know, you may be a leader, and so you're wanting to find out, you know, how do I select board members, or what are the things we need to know? So the first item there is set the work plan and agenda for the year and upcoming meetings. So you want to have a board that you know, isn't idle. They're proactive. They work with the CEO to really set up and ensure that there's alignment with the strategic plan, and working with the CEO to set the agendas for the meetings. You know, I've seen some boards where they just kind of defer to the CEO or somebody else to create the agendas, and they just kind of sit back and relax at the meetings. But, you know, you really want to have somebody that you can identify as the board chair, who takes this role seriously and steps in and is proactive to set the agendas. Board development and succession planning. So some people choose to have a board, what's called a board development committee. And so this can be a committee that focuses on development of the board. So that could be board trainings and board equipping type work, where you do equipping yourself, or you seek out opportunities to build the capacity of the board and its governance abilities. And then also succession planning. So you want to, again, make sure that the board perpetuates itself. You don't want people to rotate off and not be able to replace good board members. The board sets the limit and bounds of the CEO or the director. So the board is responsible for sometimes, if that happens, where the CEO is in transition or is let go, they have to find and are responsible for hiring a new CEO. But they're also responsible for making sure the current CEO is well equipped, supported, and is accountable to the board. So having a pulse on the CEO's activities is important. Establishing results and outcomes. This goes really hand in hand with the strategic plan, which we'll talk about next, that the board is responsible for ensuring that the outcomes are reached and the program activities and the goals set forth in that strategic plan come to be. And then lastly, monitoring the results. So you have a strategic plan and you have your programs and you've conducted those programs. Now you want to have a plan to evaluate them. And the board plays a key role to work with the CEO to evaluate the program impact. So the next slide is, you'll see I have these connections to today's economy. So what we talked about in the previous slides is foundational to any economy, but I wanted to connect it to our current situation and list some things that are, really pertinent, especially now. So the first there, transparency of activities. So people want to see and know that your programs are consistent with what you say you are doing or what's said in your mission statement. So they, divergence of your actual program activities from your mission could cause donor distrust. So you want to make sure you're consistent. Continuing to stay abreast of changing laws and regulations. Sometimes organizations will designate an individual on the board or a staff member to stay ahead of all these changes, which gives another reason to have lawyers or accountants, at least one on the board that can understand these, especially now because of so many changes almost week by week with new coronavirus legislation and how that would impact the nonprofit. Review policies and procedures to make sure they're meeting objectives. So what you passed, say, 5 years ago, as far as certain procedures of the organization, like cash collections, ethics, remote work policies, those things, you may have to go back and look at them again because of the changing environment. So it's recommended to at least look at your policies annually, do a quick review and see, okay, what needs to be updated. But especially now, that's even more important because some of what was may be completely outdated now. Reviewing mission and goals and making sure you're consistent. So you want that alignment. We'll talk a little bit more about it, but your donors are looking for that, especially nowadays. Fiscal oversight and being proactive. So now more than ever, the board has that role to ensure that, with an economy that, a lot of donations or program fees are declining for nonprofits, you want to have a plan, a secondary strategy to make sure you're abreast of the financial pulse of the organization to take immediate action if necessary or pivot if you need to. Honoring donor intent, restricted gifts. Again, right now it's important as, sometimes reserves are depleting, your nonprofit's going through decision making. Do we use this restricted money? If the donors have restricted it, typically you want to request a release of that so that you're not misusing of funds and dishonoring the trust with that donor by using it for general purposes. And then lastly, alternative to have board development committee address these issues. So again, as I mentioned before, you may choose to have a development committee of the board that really does a deep dive on these issues. So the next, we'll break up this line with a quick poll. So first question is, does your board and key management personnel currently conduct self-evaluation? So that's something to consider right now, and we talked a little bit about that, but many of you may or may not have even heard of this or have done it before, but it's something to consider, reflect on, and look to do in the future to strengthen the board's involvement with the organization. So and if you can use the chat feature. You can type that in just so I can get a sense for where you're at. Okay, so we'll move to the strategic planning section. So strategic planning and aligning purpose with action. So when I talk to nonprofits, many say they do strategic planning, but really it's at what level is that? And at what level are they truly doing strategic planning? And I think it's important to start with the why. Why do we do strategic planning? Because most people, they realize, yes, it takes a lot of time. It takes a lot of effort. It takes coordination of resources. And it also takes the buy-in of everybody in the organization, including the board. But you can see there, I've listed some reasons why it's important, some of which we mentioned before. Ensure that the organization meets its goals, prevent drifting from mission, which some people call mission creep, diverging from your core mission that you set out to do from the very beginning. Assessing risk, which we'll talk about a little bit later also. Prioritizing what's important, and avoiding unnecessary expenses toward unrelated activities. And lastly, their team unity and clarity of direction, which is so important to stay on the same page with all your staff, your board, and all your key stakeholders, that you're saying the same thing, you're all sharing that same journey together, and they know where they're going and they know where the organization's going. Because the last thing you want to do is have a situation where your staff have no clue as to where the organization's going and what they're serving for. So you want to constantly align the activities with that vision and put that vision in front of your whole team and reinforce it regularly. And that's what strategic planning can do. So what could go wrong if you don't do this? And, I've seen it happen. You can see they're taking on too many activities. So you may be in a situation where, as opportunities come up, you grab them and the organization will just take on 2, 3, 4 new programs or activities in a single year, and then look back and say, okay, well, what have we accomplished? And our resources are spread thin, people are burnt out, and have we really advanced our core cause? So you want to be count the cost, so to speak, of taking on those extra programs. But before that decision's made, make sure it aligns with your organization's core mission and aligns with the resources available. You can see unexpected and unplanned occurrences threaten the existence and programs of the organization. So that could happen if you take on a program that you're unsuited to accomplish, and so you're kind of stuck in that program now to manage it while not having enough resources. And then lastly, confusion about the direction from staff and management, because they just see so many different programs coming into the organization and taking on so much that they've lost sight of, well, what's truly important. So we'll go to the next slide here. Now, I definitely don't expect you to read everything in this diagram, but it's called the strategic planning process, so you can look it up also separately. But strategic change cycle is the actual name of this term that was coined several years ago. But the gist of this whole thing is that the strategic planning process should be dynamic, which means it should be ongoing. So it shouldn't be just one point in time you come up with a strategy and then you never address it again throughout the year. You should be coming up with that strategy, but also taking action to implement it and get it disseminated to everyone in the organization and getting them all on board. So you can see the steps to strategic planning, 1 through 10 there. So starting with initiating the process, which is buy-in, which can sometimes be the most difficult part of that process. Going through, okay, what defines us? What are our strengths? What are our competitive advantages as an organization versus anyone else? Okay, we need to play to our strengths, and that's what a SWOT analysis does. Is it looks at the strengths and weaknesses of the organization and invests in those strengths while recognizing the weaknesses, and also externally looking at opportunities and threats to the organization. And then moving on down, once you've actually gone through the strategic planning process, you adopt a plan. And I usually advocate that it's written and communicated after that plan is adopted. And you paint a picture of the future in that plan so that the stakeholders that are aware of that plan and rely on that plan can see where the organization is going. They're much more likely to get on board and continue to be on board throughout the whole implementation process. And then as you're implementing and going through the implementation, you always want to look back, step 10, and evaluate, okay, what worked, what didn't, what did we succeed with, what failed, and do we need to change anything? Because again, this change cycle, as the diagram will show, is kind of a circular thing where feedback keeps happening throughout the process, where the environment changes around us, and so we need to be aware of those and how that could affect our plan. And so we need to build that into the plan as we go. So what are the components of the plan? That's on the next slide. I just summarized some things you want to have, especially if you have the written plan. So you do want to have, it's time bound, so you want to have some coverage periods so you know what your target is, so it's not so open-ended that you don't get anything accomplished or done, but you want to have some means to track it. You want to start with a summary where paint a picture of where you're going and then go into the details. Okay, defining who we are is important as an organization. You can see there in the description, vision, mission, and values. You have to start with that because if you start going in and talking about your goals without redefining your vision, mission, and values, oftentimes the goals will tend not to relate to those, but it'll be whatever the whim is and of the moment, or whatever somebody's opinion is at the moment, and can get you off track from achieving your mission. And then on down to the inputs in this plan, you want to have the right resources and guides and data available. Some of the data may be gathered by the organization itself. Some data may be available through industry associations or other nonprofit associations that you can either purchase, or a lot of it's available for free. They can help you with statistics and different studies to see what works, what doesn't, and really back up your plan. So the next slide, ensuring alignment with mission. I just wanted to reinforce this. Again, starting with the mission, starting with the why, as many of you probably heard that term before. Mission, what is that? Well, it describes what the organization does and its purpose for existence. It's the nonprofit's bottom line, and the alignment with that is the measurable characteristic. So with for-profit businesses, it's pretty straightforward, cut and dry what they're achieving. Well, it's maximum profit for the shareholders and other owners. For a nonprofit, it can be a little bit difficult to see what is the what is the target, what's the value proposition here. Well, you're reaching clients, you're reaching donors, you're reaching stakeholders. So it's a little bit more difficult to pinpoint that, but one thing that you can hold constant is your mission, and why do you exist, and what are you after as an organization, and that's how you target that. So you can see now tying this to today's economy, strategic planning. Well, why is it important, especially today? So donors, segmenting your donors is important today, especially because of just so many different donor interests, donor groups geographically, economically, interest-wise. So you want to have a good way to track your donors so you can reach them through communications in a way that really is unique to them. So being able to track that, segment that, because now more than ever, donor retention is really key. You don't want to lose the donors because with so much going on, they need the connection, and so reaching them how they want to be reached is important. Revisiting SWOT, so that's assessing your organization's strengths, weaknesses, opportunities, and threats, especially now with the environment, legally and compliance requirements changing, and so much changing around us, that we want to as an organization, be sure you're reestablishing yourself and continuing to communicate to your donors really who you are, and so that they can consistently hear that message, rather than many different shifting communications that may come that could cause them to lose focus and get disillusioned about what you're really trying to do. We've talked about some of these others. Building the donor relationships and engaging them. Again, that goes back to segmenting the donors, reaching them consistently with marketing. And then also the stakeholders. So this term stakeholder is going to be important because nonprofits, more than even business and for-profit entities, have to be concerned with stakeholders. And in today's economy, because our communities and the political realm and our neighborhoods are so connected with what we do as nonprofits, it's important to identify your stakeholders. So what that means is anybody that has a vested interest in what you do, or that could be impacted and influenced by what you do. And so oftentimes that could be your donors, your clients, that could be the community at large, your city officials, that could be your vendors and suppliers. It's also your employees and your personnel. So they're all stakeholders that have a vested interest in what the organization is doing, and you want to make sure to address all of them and make sure that they have well-being, and that the well-being of those stakeholders is in mind. Remain steadfast with the mission. Despite all going around us, donors want to see that you are steadfast in keeping to your mission and not veering off course. So our second poll here, does your board and key management personnel currently conduct strategic planning sessions annually? So this is something you want to honestly evaluate. And I'll tell you, some organizations may do it, but they either don't write it down, or they don't follow up and take action throughout the year on that strategic plan or evaluate it. So it's important to do all those things. So I pose these poll questions just kind of as a point of reflection. Maybe you do it, but you're not really writing or putting it in written form. Your strategic plan, you go out, you go on a board retreat or staff retreat, and you take 2 days, you come up with a great plan, but if it's a plan sitting on the shelf, then it's not really being implemented and evaluated and functioning as it should. So you want to make sure if you've invested up front, that you're taking also the time to continue to work with that strategic plan throughout the year. So the next area we'll look at is risk assessment. And this relates back to the strategic plan, but I just wanted to highlight some key areas because risk assessment as part of the strategic plan is even more important today. So risk assessment, you can see there, it's identification of risk to achieving your objectives as an organization. So many times we get caught up in working in the nonprofit, but we don't pull ourselves out for a moment just to look externally, around us, our environment. Okay, what's there, what's changing, and what could threaten our existence? And so especially now, we need to pull up, look around and really see, based on the political environment, based on the economic environment, and our changing community, how are we going to continue to persevere and continue operating our programs successfully? And those could be internal and external risks. Internally, staffing changes with remote work situations, and the adapting to COVID-19 restrictions for the workplace are some risks, and also loss of revenues are some internal risks. Externally, the changing nature of regulations and compliance requirements are happening day by day, week by week. So all of these risks come into play, and you just want to be aware of them and change and pivot if needed, and adapt. This is where the internal control processes come in again, and those are those things that ensure that you're meeting your objectives. So what are your policies and procedures you have in place that ensure your organization is meeting financial reporting, operations, and compliance objectives? And these also help to prevent and detect, fraud or errors going on in the accounting, and also just in terms of your programming. Also, you want good internal controls to protect yourself. The next slide is what's called the COSO Cube. And this really just shows three main areas. What are the objectives of controls at the organization? And so the objectives tend to be operations, reporting, and compliance. So operations are your programming. You can see on the top of the cube there. Reporting, that's all your accounting. If you need to do grant reporting, accounting reports, financial statements, controls affect that. Also meeting your compliance requirements. So maybe you have a grant and you need to meet certain compliance requirements for the grant or other city regulations. So good internal controls ensures you're hitting all three of those. That left side of the face of the cube there is all the different areas and realms of controls. Starting at the top with the environment, that's all your ethics. Tone at the top that feeds all the way down to the specific policies and procedures at the bottom there, monitoring and specific activities that you have in place to ensure that you're meeting all those objectives at the top. And then off to the right there, you can see it's based on the structure of the organization also. So you want to communicate your controls on down from the top all the way through divisions and to staff at those levels as well. And that needs to be communicated through supervisors communicating policy and following those guidelines. The next slide is a risk matrix approach. So this is something good for organizations to begin to think about. And to be honest, most don't really do this, but it is worth, especially now, the investment of time to do this. But the basic idea here is that you create this matrix based on the likelihood of some event happening and the impact it could have. You can see there on the bottom the scale of impact, and then off to the side on the vertical side, you have the likelihood of that happening. So the red areas are those that have a high impact. If it were to happen, it could cripple you, and also a high likelihood that it could happen. So those are the urgent things that need tending to. So you want to list those things that are more urgent, have a high likelihood of impacting you, and if they did occur, it could cripple the organization. So those you want to spend some time going through those risks and finding out, okay, how can we adjust? How can we mitigate those risks? And so this risk matrix is a sample of how you can do that, listing them out so you can see that and make some strategy around it. So risk assessment in today's political economy. So how and why is this important today? So a few points we'd already hit before, but you want to ask the right questions about how does this COVID era impact us as an organization? So what are those rules and compliance requirements out there that could really affect how we deliver a program? Maybe you have a counseling component. And so before you were doing face-to-face counseling, but with these restrictions, now you're having to adapt and find out how to implement that program. And a lot of people are trying to find out new ways of doing things, but not even the things that have already happened, but things that are on the horizon. You want to be doing that proactively and saying, okay, well, how can we ask the right questions so we're prepared for mitigating those risks that could really impact our organization? So the third poll here, how many of the following key policies do you have in place at your organization? So again, an opportunity to reflect. I personally like number 6. It was backed by popular demand. I find a lot of people admire that policy a lot, so I just threw it in there. So if you have that, you're already ahead of the game. But the others are important too, and so I wanted to make sure that I listed those there. Many of these, again, are going to show up on the 990. So you want to be sure you have policies around these areas, especially if you're filing the 990, because you'll have to disclose whether you have them or not. But it's also just a peace of mind knowing that you have it. It's protecting the organization should something happen, and gives you guidelines for how you're operating, so you don't have to do a lot of guesswork there. Okay, next area is budget strategies. We've just got a few left, and then we'll end with questions. So the concept of budgeting, boiling it down, a budget is a plan to get resources and allocate those resources in a prudent way to accomplish a purpose. So, I mean, when you boil it down and you think about it, that's what a budget is. It's you're making policy decisions, you're making a plan. It's an estimated plan, but you're figuring out what resources you're bringing in to the organization so that you can then allocate those resources out to accomplish some sort of purpose, which should be consistent with your mission. So the rules of budgeting, I list 4 main rules and concepts of budgeting that you want to start with the budgeting process in your planning process. So you can see rule 1, they should be time-bound periods. So I think people mostly get that, they do it based on their next annual fiscal year. And they should be driven by a strategic plan. Now, the second part, I think people may not always figure that or factor that into the budget process. And I always recommend nonprofits do this before they even start budgeting for the next year, is revisit their strategic plan. Because you want your budget to basically be an expression of your strategic plan in numbers. So the strategic plan addresses financial and non-financial matters, but the financial implications of your strategic plan should be expressed in your budget, because ultimately you want your budget to allocate resources to advance your strategic plan and goals. And so if you think of your budget in isolation from your strategic plan, you're going to end up spending money on a whole bunch of things that aren't really consistent with your mission, vision, and goals. So revisit that strategic plan, or maybe even start the process. You still, if you're a calendar year organization, you're getting around to budgeting maybe now for next year, look at your strategic plan or start the process so that you can have something workable that will influence and really influence the roadmap of your budget. Number 2, garbage in, garbage out. So everybody's heard this term before, so it's nothing new. But if you hurry up and rush through your budget because it's December 30th and you have to approve it by New Year's Eve, when everybody's firing up the grill or getting ready to watch the ball drop, and you're trying to vote on a budget, that's probably not the best thing in terms of making sure that everyone's had all the input and all the information, considered it, and considered all those factors. So whatever you put into the budget, you're going to get out, and it won't be reliable or accurate if you don't put in the time or get feedback and input from your staff. Rule 3, so important now, budgets should be flexible, especially now because of so many changes. So many organizations will adopt their annual budget, never look at it again, or just look at it, that same budget at a monthly basis when they're looking at board reports. Now more than ever, a lot of what's recommended as best practice is to use some rolling budgets, which I'll go over in the next few slides, in order for it to be flexible and adapt to changes. And then lastly, just realize budgets are estimates; they're not perfect. So with that original adoption, don't freak out that, hey, we didn't talk about our office supplies. It's fine. Just get something adopted, approved, and workable, because you're going to go back to it, or at least you want to as an organization. Roles and responsibilities. So in the budget process, there are roles for each person to play. Typically, at different levels, you have the board involved, you have the CEO or the executive director, you have the CFO, if there is a CFO. Sometimes it's just the executive director or the treasurer of the board. You may have managers and supervisors, and then most organizations have some sort of volunteers or staff as well. So each of these key players have a role. It's just a question of, do you involve them? A lot of people will push a budget through just the executive director working with the board, and they leave out, the accountant, they leave out the managers, they leave out the staff, they leave out the volunteers. But what's suggested is if you take enough time and you plan it out well, you gain the input at all these levels. And the more you gain buy-in and input, usually it works out to a better process where people have bought in, and you have a lot more information to work with in terms of on your programs, because typically the frontline people, your staff, have the most information about what works and doesn't and what costs are needed for the next year. Types of budgets. So I won't belabor this too much, but I just wanted to throw out there quick definitions of the different types of budgets, because many people think there's just one, but there are actually many types. The few that I'll highlight are program budgets. So I really recommend, if you have multiple programs, you do budgets by program. And that's because each program you want to think of in a sense as a standalone or able to sustain itself. And you also want to see if you charge over what's called indirect costs of your administrative costs, a portion of those to the program. Is it running at a loss, or are you netting positive? It doesn't mean that you need to cut it if it's running at a loss, but it's good information to know, because maybe there's a more effective and efficient way to run that program. Cash flow budgets, so that's what we're going to talk about on the next slide there. Budgets to project schedule, timing, nature, and amount of revenues and expense by month. And so that's what I mean by rolling budgets or cash flow projections, which I really suggest as an organization you consider doing this now, especially in today's economy. So the next slide there, rolling budgets. So what are these? Well, they're dynamic budgets. So that means you don't just approve your annual budget, leave it at that and move on, and then just produce that same budget report with your actuals to compare every month. So you want to be always revising your budget. Typically, you want to, even in any other year besides the times we're living in, you'd want to revise at least once, maybe twice throughout the year, because usually you get more information throughout the year about a revenue stream or new revenue source that significantly impacts your budget. So that's perfectly fine too. And typically you just have the board approve a revision in order to factor those new key pieces of information into your budget. Cash flow forecasts are a little bit more difficult to do. They require a little bit more expertise and time, but I recommend doing them now. And what that means is you're projecting the timing and flow of cash in and cash out. So an annual budget will tell you totals for the year, but it doesn't tell you when you're getting that money. So you may have a total of, say, 100,000 from grant revenue, but that budget doesn't necessarily tell you which month you're getting that money and when you may have a shortfall that you might have to reach out for financing sources. So a cash flow forecast can tell you as you have good information, and the horizon's usually a month or two out, that you can reasonably estimate when you're going to bring in cash and then pay bills, and then you can see, okay, we're going to have a shortfall next month and we need to plan for that. Okay, so budgeting in today's economy, I think I hit most of this, but some things that I'll just highlight are, you want to revisit your mix of funding sources. This mix is changing for nonprofits right now. Some people are experiencing a big decline in program fees, so that could be counseling fees and other services you provide, while maybe contributions are going up, and the likelihood you'll be able to sustain that goes up. Or government grants are tending to be a little bit more secure. So you want to revisit your mix. It's always good to have a mix rather than one single source, but you want to see what in these times is going to produce more stability, and maybe market and reach out to those audiences and diversify your funding mix a bit more. And then also, like we said, do those cash flow projections. So for the sake of time, I'll skip through poll 4 and go on to dashboards. I have a little nifty ticker symbol scrolling through there. So, but that's not the kind of dashboard we're talking about right here. What you want as a dashboard is non-financial and financial data. So a nonprofit, typically at board meetings, you're going to get anywhere from 10, 12, 15, maybe 20-page financial reports, and you get death by financial reports. But what you should have is something more of a summary of results. And it takes some time to develop this, but you want to have your key metrics that the nonprofit is monitoring over time so that you can summarize that for the board and the key decision makers and compare that result over time. And you can see a sample dashboard there, number of media mentions, number of volunteers, number of clients served. And this is definitely case by case. There's not one size fits all here. It depends on what's important to your organization and what is your organization's mission, which goes into the next slide in designing the dashboard. So these are some questions to ask. Who's the audience? What are your goals and mission? What's important for you to track? What do your grantors want to see? You do want to keep metrics under 10 items for sure, and even try to hit 5 or less, because once you get over that, you start to get distracted and you can't really focus on anything. So and you don't want that information overload, like I say down there. But there's value in tracking non-financial and financial data as well. So dashboards in today's economy, how and why are they important? Well, again, like we've said, today's economy with COVID-19 restrictions and changes to program requirements, it may impact what you need to track, what data you need to track. Maybe its number of clients served is going to change dramatically, and you need to factor that in. And so tracking that over time, especially in these next months, will be important to see whether that program you need to adapt in order to capture the clients that you used to serve. The last section, and I'll skip the poll 5, but the last section is just leadership strategies. Just some things I've picked up over time working with nonprofits. Even beyond what I list here, the one thing that's so important, and I can't stress it enough, is communication. What I've seen in cracks in organizations is when leaders don't communicate and aren't transparent with their staff, going behind their backs, or just a general environment of distrust. When that happens, the organization cannot succeed. And so I really recommend transparency and strategic leadership. This concept and strategic leadership kind of embodies this, but it's the ability to handle complex problems where there's no easy short-term solution. Risks are high and the impact is high. So how can leaders navigate through that? The next slide is just really, I boiled down 6 or 7 core principles I think that can outlast in this era, but also and beyond. And many of you have heard the term emotional intelligence. So these are rooted in that, but the core idea is you're self-aware. You're aware of your limitations as a leader, and staff and everybody in the organization can go through this exercise. But as you grow in leadership, it's understanding yourself, exhibiting humility, you can see managing success and power is related to that. Balancing, integrity needs and also practical needs, and empathy, which is considering the perspective of others. So if you hold fast to these, those will, as a finance leader, member of the board of governors, or a CEO, you'll be able to create that tight-knit atmosphere of transparency. And especially now, people are going through a lot, remote work, working from home, and dealing with the realities of life. I think transparently living and being real with them of the struggles and challenges, being open with communication can really help an organization thrive. And with that, I'll skip through 6. The last slide there just lists some information for me, contacting me, but I do help nonprofits with all sorts of services, ranging from consulting to audits, reviews, compilations, and also the tax returns. So we'd love to speak with you if you have those needs. But I know I ran a little bit over, but we may have time for a few questions. I'll defer to Heather on that.
All right. Oh my gosh. No, not just me. There you are. No, not just me though. There we go. No, that was excellent. That was a lot of information for sure. And I definitely took my notes. I don't have any questions in the comments, but I had a question regarding strategic planning, especially since, for us, we do it every year. What are your opinions, or what do you suggest in terms of having like a facilitator for strategic planning? Is that a recommended practice, or is it, what is your perspective on that?
Yeah, I think it is a best practice. What having a facilitator does is it removes some of the barriers to transparency. I think through that particular facilitator isn't also biased by what's happening in the organization. They don't have the complex relationships with people, and so they can tend to be more honest and draw out honest questions, and then also kind of act as a cushion or barrier for honest answers, so to be able to soften the blow a little bit, because they're independent. And that helps things stay on track too, because if you have someone that's their sole role is to achieve a strategic plan goal in the end, that they're brought on, that they'll have that mindset through the whole thing, rather than trying to also deal with those complex relationships with staff that they see on a day-to-day basis. So
that's great advice for sure. I also love that policy number 6 about rest and relaxation. So we'll be talking to Patrick about that one. No.
Yeah. I like that one personally.
Yeah, that's pretty excellent. And then you talked about a mixing of funding, especially now. What is kind of like, I mean, every organization is different, of course, but what is kind of like a good best practice of where the funding should be? Like, is it, 30% from events or programs and, that kind of thing?
Yeah, and it'll depend on the core mission of the nonprofit. Some are more business-looking nonprofits, which chambers tend to be hospitals, education, where they're charging fees for most of their services, and so the object there would be to make sure that you don't have one too much concentrated in one client or one customer or one grant. So you want to diversify your fee-based clients. But it's also important, even in that sense, if you can mix donations and contributions and cultivate donors. That's a challenge for the business type nonprofits, because typically people see them more as a business and self-sufficient, but that's not always true, and it's better to have diverse funding mix. So cultivating donors, even for business type nonprofits, is good to vary the mix, but you'll still have most of your revenue in fee-based, but you maybe it's 80-20 instead of 95-5, so, and vice versa with the donative or the contribution-based nonprofits. You don't want everything in like 2 donors or 1 grant from the government or something like that. You want to cultivate a broad base of donors.
Cool. So it's important to kind of look at all of that and go, okay, where are my opportunities here?
Yeah.
Cool. Excellent. That's all the questions that I wrote down. But I know everybody can reach out to you if they do have their own personal questions. Sometimes when we're talking about sensitive things like this, maybe they're like, I don't want to put out all my challenges right on Facebook.
I hear that. Right.
So I will put up your slide once again. Again, this is how to contact Michael if you have any questions. And again, I want to thank you so much for taking the time out of your day to go over this. This is, like you said, sometimes a little bit of an uncomfortable conversation, or like, I don't really want to talk about this. I want to do all the fun stuff, but it's so fundamentally important to the way we all run our organization. So thank you so much. I really, really appreciate your time.
Yeah, thanks for having me, and thanks to everyone out there. Appreciate it.
Awesome. All right. Well, thanks for tuning in to Learn It Live, and we'll see you in a couple of weeks. Thanks.